Good morning, good morning, good morning. This is Brent Harding, and I am your host for the Wealth Warriors. Today, we actually had a guest speaker, and I am so sorry to report to you that she was not able to make it. But I'll tell you what, one of the things that we know is the show must go on. So I decided, well, you know what? This is an opportunity to do a little bit of freestyle. It is an opportunity to share some of my personal business experience with you and give you some pearls that you will be able to take with you today. So we are still going to have a wonderful hour of conversation. How about that? I want to share with you that what we're doing is we're going to a format that is going to, each month, we are going to have a component of wealth. So at the end, you have 12 principles or 12 features that are about wealth. And what inspired that was my reading of Think and Grow Rich by Napoleon Hill. And I've got to tell you, it is an old book, we know that, but it is a book that is worth reading. It is something, if you are a person that just doesn't have the time, which is often the case like myself, then this is what I'm going to share with you. Take that book and turn it into your DVDs, your CDs, put it in your vehicle when you are driving down the street. Zig Ziglar used to call it Car University. Become a student of wealth. And he has a fabulous book that is time tested. It's nearly, I think, probably about 100 years old now, and still the principles are the same. Now, he talks about the 12 key components of wealth. And the interesting thing about that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Number 12 is actually money. That is that is the 12th of the principles. So you're saying, well, that doesn't, how could that possibly be? Well, one of the principles that he talks about is health. If you have your health, there is nothing that you cannot achieve. But a lot of times people think of money as that first key component. And I'm going to have Trudy back on the show because what I liked about her topic is that she says money is an intellectual sport. Can you imagine somebody says it is a sport? Because at some point in time, you reach the place where it becomes fun because you're moving money, you're trading money, you're doing different things with money. Money is a vehicle, it's a tool that gives you a lifestyle. Let's face it, we can't eat the money. We can eat what the money allows us to purchase, but we can't eat it. And so she's going to come back and talk about this as an intellectual sport. And when it gets to that place, that is absolutely awesome. So here's the deal. We're going to be talking about money as an intellectual sport. We're going to spend a month talking about insurance. You're saying, Brent, insurance, really? Well, I've got to share something with you. Insurance can be a powerful investment tool if you understand insurance. It can be that kind of tool. We're going to go back and we're going to discuss credit. There are so many components of credit that there are things that you have never even heard of relative to credit. We're going to talk about real estate, in purchasing real estate, those acquisitions. We're going to talk about other investments. For example, investing in jewelry, investing in art, investing in things that are tangible, that can be bought and sold and traded. We're going to talk about so many elements, but each month we will have a lineup which will be listed on Facebook under the Wealth Warriors, and it will go through each of those. So today I thought what I would do is I talk about mortgages, and I want to talk about protection and protecting your property and how you can go about doing that. You go about doing that. Oftentimes people think of protecting our property with insurance. And yes, you do protect your property. You protect it against the slip and falls. You protect it against slip and falls. You protect it against hazards, fire, things of that nature. But what about, let's go back to that slip and fall. You have a certain amount of protection that comes from your insurance company. But what happens if the insurance company does not agree with you and you are held liable? How do you protect your asset? Well, let's say an accident. How do you protect the equity in your home? Well, one of the things that people often do not realize is that when you have a loan or a mortgage on your property, there is a level of protection with that, because the very first thing that anybody is going to do when there is an accident is, and especially if an attorney is involved, they are going to contact or go to the registry of deeds, and they're going to comb that and see if you in fact have property. And then if you do have property, how much equity is in the property? All of us are so enthusiastic when we paid off that mortgage. We say, yay, it's done. I say, no, it's not. I say you always want to have some level of mortgage on your property. What? Some level of mortgage on my property? No, I want it paid in full. I don't want that debt. Well, here's the deal. There is a way for you to have protection on that property that is a debt that you control. Now, if you are able to do something like that, would that not make a better scenario? Let me share what happened years ago when I was a mortgage broker. Had a client who had a piece of property that was free and clear. There was no mortgage on it. Nothing was owed. And she was coming in to get a mortgage. She had a 3-family unit. She lived in the first floor. She had tenants on the second and third. Now, it is questionable as to whether there was water on the stairs or not. However, and I'm sure when landlords are going to be listening loud and clear for this one, whatever the case may be, there was a slip and fall in the house. We were in the midst of refinancing that property. A property free and clear, $300,000 worth of equity. What do you think is going to happen to that person? Now, I didn't give you all of the story. Here's the other part. For whatever reason, this young lady decided that she didn't need to have insurance on the house anymore. I own it free and clear. A lot of times people think about a vehicle and they say, hey, once I own the vehicle, I'm not going to have all of the insurance. I'm going to have compulsory insurance because I don't need to have any more, because it's not required, because I own it. That is not what you want to do when you own property. When you own property, and even if you own, it's a single family house, there are people that can come to your home. I had a situation like that where the young lady said, you know what, Brent, I just want to slip and fall on somebody. No, she didn't even say that. She said, I want to stub my toe on somebody's property and sue them. We were walking out of my house. I said, stop, right there. I went in the house, had a couple of people come out and watch her walk down the stairs to her car. And I said to myself, I don't ever want her in my house again, because she's already giving me a clue. She is telling me that she will sue you. She will sue. I don't know, she could possibly sue me. So why would I want to put myself in a position for that to be the case? Absolutely not. Now, so let's go back to the other story. The young lady is now in the midst of a mortgage refinance. The person, the tenant, allegedly slips and falls. And guess what? She immediately goes out and gets an attorney. And of course, what does that attorney do? That attorney goes to the registry of deeds and looks up the property and says, heaven, we found heaven, because the property has no mortgage on it. Now, A suit is ensued, and so what happens? Now the property is tied up. It's encumbered by the lawsuit. Nothing we can do. Here she is. Now the likelihood is the equity in her home is going to become that tenant's equity. And so what's happened to her house? All because she did not have any protection whatsoever. She had no insurance, so that meant she was liable. How about this? How about she had the house encumbered? Interesting thought. How could she have it encumbered? I'm going to share it with you. Now, she could have it encumbered in such a manner that she didn't have to actually have a debt, in a matter of speaking, but the property became attached. Well, with that in mind, her house would have had a level of protection. So for you as homeowners, for real estate investors, for wannabe real estate investors, for soon to be real estate investors, here's something you can do. How about we encumber the property? Well, Brent, how will we do that? How about we get a line of credit, a home equity line of credit against the house? That is recorded because in effect it is still a loan. Whether you borrowed against it or not, the house is encumbered. So here's the deal. How about that $300,000 worth of equity? How about we encumber it with a line of credit for $275,000? We leave about 20% or so available. How about we do that? Now, you do have to use the line of credit periodically. So how about go and purchase something and pay it off over a period of time, 3 to 6 months. And then go purchase something again so that that line of credit is active and the property is encumbered. So when somebody comes along and is looking to sue, the property is encumbered by an active loan. That can be removed at your desire. It's either removed by you or it's removed by the lender, but you have the right to have that line of credit working on your behalf. Now, how sweet is that? I still say you do have to have you got to have insurance. Come on, this is an asset. This is an asset that has value. Why is it that people $1,000, $2,000 a year for $1,000, $2,000, let's say it's $5,000 a year to protect that asset? That is money in the bank for you. That's property that you can borrow against, and yet you would forsake that for a couple of $1,000s. And that's what this young lady did. And guess what? Bye-bye to her home. But years that she put into investing, to building, to protecting that, in one slip cost her her home. Oh yeah, she can live in it, but now your tenant has walked away with your equity. So unless that equity builds up over years again, what has happened? She doesn't have that. She can't borrow against it because it's totally encumbered. All because she did not have the insurance on the property, or she did not have it encumbered by something that she could draw from. So you know what? Sometimes people say, well, lines of credit are bad. No, they're not. It's what we do with them that makes them a problem. It is when we borrow and we do not have a plan, or we borrow and the plan changed due to unforeseen occurrences. We cannot afford to have an unforeseen occurrence when we're dealing with our money. We have to plan it out. You're talking to somebody that has had experience with borrowing money, things changed and a plan changed, and what do we do with that money? And more often than not, people end up spending the money, and they end up doing something that was contrary to what they started out with. And as a result of that, what happened? They now have zero. and they have a debt. Zero in a debt. What is that about? That is pure and unadulterated insanity. And yet we do it. That's why the wealth commitment exists. What are we talking about? As we're talking about becoming warriors, warriors for our financial future, warriors for not just our future, but our children's future and our children's children's future. Remember this, that old money didn't start off as old money. It started as new money. And what happened? New money became old money over generations. And that's what we're looking to do, is to create generational wealth by understanding principles, by understanding components of wealth. You know, more often than not, real estate, it's tangible. People can see it, they can feel it, they can smell it. It makes sense to them. So they invest in real estate, which is a base foundational item. We don't think about investing in other components, investing in insurance, investing in other tangible goods, investing in credit. You will never have as much money as you have access to credit. Credit begets credit. Yes, money begets money also, but you'll never, it's about access and what access can do. It can turn corners for you. And that is what we're talking about doing, turning corners into prosperity. Over these next months, we are going to talk about assessing our wealth. We're going to take a picture of what we look like today, where we want to be tomorrow, and how do we get there. For example, you're looking to bring in $20,000 a month into your household. Break that down, and how much money is that a day? What kind of work could you do that's going to give you access to that? What kind of investments could you make that are going to give you access to that? You're going to hear me talk about one of my favorite topics of conversation, and that is business models. And among those business models, my absolute favorite is network marketing. I am a serial network marketing entrepreneur, and I love it. And I'm going to share with you different types, because not everything is for everybody. Some people actually like product-driven network marketing business models. Some people like things that occur or activities that are directly on the internet. I'm going to have a few selections for you. So we're going to be talking about assessing the wealth. We're going to have a club, a wealth commitment club. We're going to have levels of club activity based on where you are today and where you want to be tomorrow. We're going to have more guest speakers on, and we have a lineup. And I tell you what, Trudy does apologize that she wasn't able to be here this morning, but money is an intellectual sport, and it will be coming back. We are going to deal with accounting, because you need to know how your money is coming in, how it's going out, how to measure it, how to, I don't want to say play with it, but in a matter of speaking, there is some play. So for example, you are a W-2 job, you're a W-2 income earner. Well, do you realize that you can actually keep more of your money by having more exemptions? And there is a point in which we then have to roll it back. So let's say you're going to take 9 exemptions from January to June. Come June, you're going to roll back to 1 so that more money is taken out. And therefore, when it comes to paying your taxes, you should balance out at even board. Because maybe you want to take that money, that extra income, and you want to put it into something. When we take extra income, it's meant to be utilized for wealth building, because that's what this is all about. It's about wealth building. You know, I would have the privilege of working with PPI, which is Peak Performance Institute. And in a conversation that I had with one of the principals, he said, Brent, you know what? Your entire life, your working life, has been about creating wealth. And when I stopped and I thought about it, you know, he's actually right. I have done numerous things to create levels of wealth. Why? To give back to my family, to make a better lifestyle for my mom, to have a lifestyle of my own, to travel the world. You know, did a post recently on Facebook that says when we're children, we see the world as black and white. You know, it's either it's true or it's not true. It's factual or it's not factual. Children are quick to say, but that's not what you said. But that's not what you told me. They're very black and white. As we grow up, we realize that things are not always black and white. There's actually a midpoint, and I call it the gray zone, where things are gray. You know, when we travel and we go to other worlds and other worlds, right? We go to other countries. For example, right now I'm here broadcasting from Trinidad. I'm working in my network marketing business, as a matter of fact, in the country of Trinidad. And I carried my computer, I carried my camera with me to share with you today. How about that? And so we are now in a global world where we can go around the world. We see the world so categorically different. It is an amazing world, and we have to see it. You know what? When we do, the world becomes very gray. And gray is a beautiful color. So let's kind of recap right now where we've gone to this morning. We've talked about protecting an asset. That's protecting our property. We protect it by encumbering it. Encumbering is not a bad thing. Most people think, I don't want any more debt. This is a debt that you can control because you have the asset. You've chosen to encumber the asset for a period of time because it protects you. You can do this on residential property. You can do this on commercial property. So now we've encumbered it. We can use insurance. Insurance can encumber the asset. Sound like a plan? It is a viable plan, and I'm telling you, it is a plan that works. We've talked about upcoming shows. We're following a model that Napoleon Hill started with his book, Think and Grow Rich. If you do not have a copy of it, get a copy. If reading is a problem because of time, then get a CD. Put it into your CD player. Use your car to work for you. Go back to Car University, listen to him. We're going to talk about 12 principles of wealth. And the 12th principle is the cash, it's the money, because there are things that you want to do so that the cash continues to move and you are in fact prosperous. Yeah, we are going to actually have a topic called health because health is wealth. If I didn't know, I didn't share this with you, so let me share it with you now. I met a Chinese gentleman. He was hunched over. And I remember him saying to me, Brent, I would give all the money I have. And this was a very wealthy individual. He said, I would give all of my money to be able to stand up straight, to have my health. Why? So that I can live my life. Because he said, you know what? I already know how to make wealth and create wealth. So if I already know how to do it, guess what? I can do it again. We can do it again. You know, I share with people that at one point in my life, I was actually a millionaires. I had real estate, I had cash. And you know, the elevator goes up. Decisions can cause it to come down. I lost a lot, but guess what? I am building it again because I know how to do it. I did it once, I can do it again. And for anybody that's listening in the audience that this resonates with you, if you did it once, it can happen again because the principles are the same. What may have been the problem was the decision that we made. For example, in the case of the woman I shared with you, poor decision when she took away the insurance, when she decided that $2,000 to $5,000 She could put that in her pocket and use it now. And what happened to the asset? She lost it. Now she's got a tenant who's taken her equity and gone and bought their own home. So not only did she lose the equity, she lost a tenant. And so the cash that she will have that will come in will pay a mortgage that she now has because of the $300,000 that now has to be paid to that tenant. We do not want for that to be your story. That's why the wealth commitment exists. Whether you are here at the beginning of your wealth creation or you are a stakeholder, we are going to have something in it for everybody. Credit. Have you ever heard of something called a CPN? Have you ever heard of something called an SPN? Maybe you're at the beginning. Maybe you're a stakeholder. And as a stakeholder, you might have heard of that. And if you haven't, we're going to have some conversation. We are going to offer you tools to create that wealth between now and the end of the year. We're in the first quarter. The first quarter is a time frame in which we're ramping up. And that's okay, because come the beginning of the second quarter, which begins in April, we are going to be expediting. You know why? Because we said it's 12 months. So these first 3 months were our startup. They were our pre-launch, if you will, to what is going to be an amazing, amazing life. We're going to offer you assessments. That's right, assessments where you get to assess your wealth. That's what we're going to do. We're going to offer you all types of components so that you can, in fact, create the wealth that you deserve. So here's the deal. Right now, we're broadcasting. We have a site on Facebook. It is Wealth Warriors. I'm going to say right now, I want you to go up to Wealth Warriors. And if you hear a nugget, something that resonated with you, I want you to go #nugget. #nugget. That's right, get the fingers moving. I want you to go up and tell us who you are, where you're from, and if you own a business, what kind of business do you own? If you are looking to open up a business, what kind of business would you like to open up? We want to share information because wealth creation is about sharing. We can't take it with us, so we need to share it with our club members, with our membership. We want to grow this thing. Our mission is to positively affect 100,000 people around the world. 100,000 people around the world, and it begins with you. Who do you know throughout the United States? Let them know that there's somebody here that cares about their wealth, that cares about their lifestyle. You care, you've invited them to the broadcast. I care because that's what I'm committed to doing, is leaving a legacy. My legacy is going to be positively affecting 100,000 people. Now here's the deal. 100,000 people doesn't mean I did it all myself. You help somebody, that adds to our 100,000 people. Somebody else helps somebody, that adds. When somebody opens up a network marketing business, whether it is Vacation Travel, it's Organo Gold, it is any one of the many companies that exist out there, when you help that vicariously, I'm a part of that process. That adds to the 100,000 individuals that we are going to positively affect, whether they're in the Dominican Republic, they're in Panama, whether they are in California, whether they are in China. We all have the ability to interconnect. How? Right here, through the wealth commitment, through the Wealth Warriors broadcast. That's right. In fact, I'm going to rename it Wealth Warrior TV, because this is where things are happening at. We're going to ask you to invite other people to be a part of this. You might find a business partner. You might find somebody that wants to do some trading, somebody that wants to join with you and create a joint venture. That's what we're here for, is to create that, to bring people onto the show. For example, next week, Barrett Matthews is going to be back. He's going to be co-hosting with me, and we're going to talk about how we account for our money from the beginning to the high stakeholder. from the dollars to the thousands to the hundred thousands. How do we account for our money? You've heard me say, use a term, cost center. How many cost centers do you have within your household? How many revenue streams are coming into your household? So you're going to hear that term, cost center. You're going to hear cost of goods sold. A lot of times we call that COGS. We call that also COGS. We're going to start snapping with that kind of information, and that is going to make you incredibly powerful. It's going to make you a force to be reckoned with. We're going to talk about where we put our money, what kind of assets do we want to purchase that create the wealth. And it all begins right here, and it begins with you. So let me share a little bit more about mortgaging, or the real estate side of where we're at. We have real estate, we have residential real estate where we live. We have residential real estate that is also investment property. So you've got your private, you've got your personal real estate. You've got your first home buyers, or you've got your home buyers, but it's private real estate. When we move out of that single family piece of property and we move into it from a 2-family or a duplex on up to 6 units, actually you can go from 2 to 6, or 2 to 5, actually 5 units. When you hit the 6th unit, now you are actually in a commercial setting. So anywhere from the 2 to the 5, that is investment property. You'll hear 2 to 4 more often because Fannie Mae, Freddie Mac, various government-backed securities, 2 to 4 family is typically what they will actually finance. And when you go into that 2-family, you're now into what is classified as investment property. And so with the investment property, you are typically going to get, or you are likely going to get a loan from a mortgage company. You'll get a loan from a bank, from a lending type of institution. You might even get a loan from a soft money lender, a hard money lender, a semi-hard money lender. We'll talk about those in upcoming shows. What kind of lenders are out there that lend money to you? We may even talk about grants, because there are some grants for areas that need to be built up. And a lot of times people say, well, I don't want to go into those areas. Well, you know, if a pool of you go into those areas, it almost becomes a takeover, and therefore you can grow a community. That is an investment. That's an investment vehicle. It might be a high wire, but here, with you meeting people that are willing to invest, that want to invest, the possibilities are endless. So we have our single family. We have our 2 to 4, which is investment property. We have beyond 4, which are levels of commercial. Now you can have commercial residential because it's based on the units. You can have commercial because it is a public standing building. These are the levels of real estate. And within them, you have duplexes, you have condexes, you have complexes, you have various types of real estate. And it's now about how you're going to get the money that allows that process to occur, how you're going to protect it, how you are going to hold that property. Are you going to hold it in trust? Is it going to be a real estate trust? Is it going to be a nominee trust? Is it going to be a family trust? There are ways to protect not only the real estate, but also to protect your money. You may decide that you want to live within the trust, and therefore the reality is you don't own anything. The trust owns it. Wow, what an idea. Did you just hear a nugget? Then if you heard a nugget, I should see things such as #nugget, see things such as #I'm in it. I'm in it to win it. I want you to not only do that, go up and share. If you look at the top of the screen, there should be a button. You should see a Facebook button. Share it on Facebook. Share it on Twitter. I just heard a nugget on the wealth commitment. I just heard a nugget on the Wealth Warriors program, the Wealth Warrior broadcast, because we're about sharing the information. We don't want to hold it all to ourselves. There is enough out there for everybody. In fact, yesterday I had a conversation with a person. We were talking about business model, and in the business model, specifically, we're talking about network marketing. And the person said to me, well, Brent, you know what? We'll run out of people to talk to. I said to him, in the United States alone, there are 300 million people. Do you think in your lifetime you can touch all of them? Seriously? Are you going to ever run out of people? We're not even talking about people that are being born yet. We're talking about just one country. How about we go over to China, where there are billions of people? We are a global society. We're not running out of people to market a business to. Owning your own business is a part of wealth. So if that wasn't clear, let me be clear. That is one of the foundations, is owning your own business, controlling that cash flow. That is one of the pillars that we will touch. Real estate is another pillar. You have insurance is a pillar. You have other tangibles that are pillars. You have investing in other businesses that are pillars, all components of your wealth. So we're going to assess where you are. We're going to make recommendations for you. You are going to be linked with a coach if you decide that's a service that you want to partake of. You know, Michael Jordan had a coach. Tiger Woods has a coach. Swimming Olympians, swimmers have coaches. I'm watching gymnastics. I love gymnastics. Coaches. We all need coaches along the line. What does a coach do for us? What's the difference between a coach and a mentor? A coach shows us the plays. I'm a Patriots fan. The coach is showing Brady what needs to be done, what the play is, how that's going to occur. That's a coach. And then you have mentors. Mentors are people that have done it. They are able to show you the full spread, the full layout of the land, because they've experienced it. They are likely retired. They may not be, but they are at a different level, a different place. They may not be playing in the game the way a coach is, because a coach is a day to day. A mentor is a month to month, a year to year. You will need both. And the interesting thing is, I know people that are in their 70s that still have coaches, because they've got a lot of life to live. My mother is 79 years old, and she is an amazing woman. She is a real estate investor. She is a property manager. She knows what it's like to have to deal with a boiler. She knows what it's like to have to deal with the furnace. She gets those things. She moves with it. There are times when she has got to call upon somebody else that already has made the play and knows the story. So here's an assignment for yourself. Think about where you're at in your life. And think about, will a coach make a difference? Because we are going to have Wealth Warrior coaches. Come April, we will be launching various components. We'll be launching wealth assessments. We will be launching the Wealth Club. We will be talking about our summit, which we anticipate will be in October or November, just before Thanksgiving. We're going to be offering those components to you, those tools that will be in your arsenal of wealth success. Sound pretty good? Yeah, baby, it is. It's an exciting life. And what can make it incredibly exciting is when you have the tools that allow you to live your life. They allow you to make incredible decisions. It is phenomenal to be here in Trinidad having a conversation with you, broadcasting, because I have the tools. We want to take that arsenal of your toolbox, your Wealth Warrior Toolbox that's full of financial tools and give you power. Give you power. In fact, I want you to hashtag I am powerful. Hashtag I am powerful. Why are you powerful? Because you are building an arsenal. I want you to hashtag generational wealth. Your children and your children's children, that's what we are working for now. Make no mistake, live your life now. Enjoy the of all of the work that you've done. There's a word that begins with an R, and it isn't hitting me right now. Somebody will probably hashtag and tell me what it is. But the labor, enjoy the fruits of your labor now. However, build for your generational wealth. And so that you get to live your style, live your lifestyle, and you put pieces in that will create the generational wealth. Now, what I say to my nephews, what I say to the children is this: I'm not giving it to you. No, you will earn it just like I had to earn it. However, what I'm helping to create a straight, narrow path. The landmines, can we avoid the landmines? We don't want, no, don't go over there, there's a landmine over there. No, not over there, there's a landmine over there. No, I've already made the mistakes so that you do not have to. Now, will you have some dues to pay? Absolutely, we all do. But is it possible that we can minimize some of those things? We want you to be creative, but with creativity, there's some creativity that we just do not need to have. We're past that. And so what we're going to do is we're going to help you with the creativity. We're going to provide you with the coaches. Now, what you'll do is you'll select which coach works for you. You will select which tool, but you'll have an arsenal to pull out and to open up. You'll have a literal and a figurative toolkit. Some assignments for you. One, get prepared to have a wealth assessment. We're going to be giving away some wealth assessments come April. We're going to launch them. Actually, we're going to launch them next week when Barrett Matthews is with me. We're going to launch a couple of tools. And then we're going to, that's the pre-launch, we're going to have a full-fledged launch in April. And it is going to be awesome. Every now and then I can do karaoke. So we're going to have that. So right now, we're going to ask you to do a mini assessment for yourself. Take an inventory of what you already have. What are your assets? Assets on the left, liabilities on the right. What assets do you have? What wealth creation have you made? What do you actually owe right now? That's step one. That's part of your personal assessment. And then you're going to be aligned with an assessment coach. And we're going to take that and pull it, massage it. We're going to pull some things out, put some things in. So assessment, hashtag wealth assessment, because that's what we're going to be doing. We are also going to be initiating a club that will meet on a monthly basis that will interface. We will talk about activity that's related to building your wealth, but it will be in a club environment. It will be a Google Hangout. It will be people will be interfacing with each other, and it will be powerful. Trust me when I say it's going to be powerful. We're going to have a couple of other activities that are for the high stakeholders. Some of us haven't gotten there yet. That's okay. We're going to get there. So if you feel that you are a stakeholder, you are a high-end stakeholder, then I want you to hashtag high-end stakeholder, hashtag high-end stakeholder, because we are going to have, we want to rocket you. But sometimes if we do not explain things clearly, that trajectory just does not happen. We've seen that occur. And as a result of it, we don't want that to be your case. So we're going to say, We're going to help you assess where you are. Some of us who are already in trajectory, we're going to say, fine, then we're going to meet you where you are. We're going to transform. You know, a lot of times people will say, I'm in personal development. Well, personal development is great, but you know what? Personal development is linear. When you transform, it's a trajectory. In fact, sometimes you go, what just happened? Because it happened that quickly. You, you, you are rocketing. And that's what we're going to do. Some are going to rocket faster than others, but by the end of the 12-month period, you are going to be in full trajectory. And from that point on, it's building. And then what we're going to have is we're going to have the beginner wealth warriors. Then we're going to have the midpoint, and we're going to have the advanced. And it will be based. So we are on a 60-month trajectory. 60 months to build, to grow 100,000 people to wealth. 100,000 people will then be able to go out as ambassadors and make a significant difference in the world. You, by virtue of the fact that you are here, you are a wealth warrior. Wear it proudly. In fact, hashtag I am a wealth warrior. Hashtag I am a wealth warrior. Say it loud and proud. I am a wealth warrior, because you are fighting for your family's financial future. And that is powerful. If you've been through a bankruptcy, and we'll also be talking about bankruptcies, we'll be talking about these things so that we can avoid them. But if they occur, how do we fix what has happened? How do we start life again? What path can we take? We've got some powerful stuff here. You hear something that resonates with you, let everybody else know about it. Hashtag it out. And also hashtag out, touch, share with people, share with Facebook. I am watching the Wealth Warrior TV. I'm watching the Wealth Warrior broadcast. Why do we ask you to share it? Because you may meet somebody in the hangout that has exactly what you need, and we create a marriage that benefits the both of you, and it becomes powerful. You know, power is in numbers, and so often people do not realize that the power is in the numbers. The power is in the numbers. The more numbers we have, the more we can negotiate or bargain with. And that in and of itself is a powerful thing. Wow. You've spent nearly an hour with me. And some of the questions that have come up have been, Brent, well, what kind of insurances would I want to invest in? That's a good question. We're going to actually have an insurance expert that's going to be here, that's going to be talking about whole life insurance, that's going to be talking about term life insurance, that's going to be talking about various variable life insurance, that's going to be talking about various components of insurance to invest in. At one point, I actually did have an insurance license. So I've got a clue. I can join in on the conversation, but we're going to have somebody here that's actually going to be the expert on insurance. And they're going to be able to, so we're going to have investment insurance to discuss. We're going to have life insurance. And I distinguish between the two of them, because one of them is a wealth growth product. The other is protection for the family, okay? Health insurance. We'll be talking about health insurance, because how much do I really need? Right now we have a mandate. Some of us need more health insurance. Some of us are in great health, but we are aged out of insurance and we're paying top dollar. How do we work around that? Because there are some people out there that are paying hundreds of dollars a month. And I know that there are people that are literally paying thousands for a family. I know a gentleman that's paying a couple grand. That's $24,000 that's going out in family insurance. So before he makes a dime, before he becomes profitable, before he puts gas in the car, he's got to take care of the insurance. That is a mighty strong nut to crack every month. Another question that came up was around real estate, and they talked about, the question was, a 2 to 4 family, what makes that work, or how would I want to work that as a business? Well, I'll tell you what, when you own a 2-family home, you are in business. You are filing a Schedule E on your tax return. You are required to protect that piece of property. So the question becomes, out of the money that comes in every month, is it covering the mortgage payment? Is it covering the payment? Is it covering the insurance? Is it covering the taxes? Is there revenue that's left after that that can be put into another vehicle? So you're looking at, well, how much money is it taking to cover? There are a lot of people that are upside down right now, that are still upside down because they brought at the height. And so what's unfortunate is there are people that are putting money into that mortgage. When we typically look at investing in a 2, 3, 4 family home, we're looking for the rentals to cover that property. And unfortunately, there was a period of time where that was not the case. Is it better to purchase a 2, 3, or 4? I oftentimes say that I like a 3 or 4 family piece of property. I like to be owner-occupied, because when it's owner-occupied, that means that that interest rate is going to be substantially lower than if it's investment property. Now, does it require me to live in that house forever? No, it does not. You do need to live in it for a period of time. I strongly suggest 36 months. And then you move out. You still are allowed to keep that interest rate, that original interest rate. So do I suggest that? Yes, I do. And with that, the 3 family means that you have two incomes coming in. So the probability is that you're going to cover that mortgage, and you're going to have money left over that you can invest in. You always want to have operating expense, a rainy day fund. So out of that money that comes in, would I set aside 10%? Yes, I would. In fact, actually, the lender is in the calculation, is going to be looking for you to have more. They're looking for 20 to 25%. But you would want to set aside at least a good 10% of that money, so that you have a rainy day fund. Actually, let me stop calling it a rainy day fund. That's part of your operating expenses. So you want to have that set aside. Then you want to take the other monies, and you want to look at, where can I invest that gives me short-term returns, that gives me long-term returns, because I might want to be using those long-term to purchase that next piece of property, or to go into a deal that I can go in for a period of time and then come out. For example, I was part of a real estate club. We were a short-term real estate club. 8 of us came together, bought a piece of property, subsequently sold it, dispersed the revenue. It was a short-term deal, worked beautifully. And those are the kind of things that we'll be talking about in the Wealth Commitment Club, the Wealth Warriors Club. Now, the reason you hear me use them interchangeably is this: our commitment is to wealth. We become warriors. So we are committed to wealth. We are warriors to meet that commitment. How's that sound? Does that work for you? I hope that it does. Well, we've covered a lot of territory today. Next week, we're going to be accounting for our money. Accounting for our money. Barrett Matthews is going to be my co-host. We are going to have an amazing and fun time. Next week, we'll have the lineup for April, so you'll know what shows you want to really be intensely committed to seeing. Other shows you hear, you got an ear for it, but they're going to be shows that you're going to want to look me in the eye, and that's okay. We will be here next week at 9 a.m. sharp Eastern Standard Time. I'm going to ask you to hashtag out that I will be here. You want to invite other individuals to come aboard, friends, family. Why? Because we want them to have wealth as well. My name is Brent Harding. I am truly a serial entrepreneur, professional network marketer, and I am about the business of helping you to create wealth. Next week, look for us, same time, same broadcast channel. Have an exciting remainder of the day. Be prosperous. And remember, look at your money. Think about it as a tool that will create a lifestyle for you. Until we meet again next week, my name is Brent Harding, and I remain your host for the Wealth Commitment. We are Wealth Warriors. Make it a fantastic, prosperous day. Bye-bye now.